Welcome. In this video is Xcn coin in the calm before the storm. We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we examine the chart from a broader perspective, we can see that the price movements are giving us clues about a classic market structure. One of the most notable details in the current setup is that the price first forms a peak, then drops to reach a clearly defined low. These types of structures provide strong signals that the market is searching for a new direction. The initial peak following the rise indicates the strength of buyers in the market, while the subsequent drop forming the low suggests that selling pressure has started to come into play. What makes this structure particularly interesting is that after reaching the low, the price reacts but fails to reach the previous high, instead forming a new, lower mini-peak before turning downward again. This tells us that there is indecision in the market. A new balance is trying to form between buyers and sellers. At the moment, the price is approaching the previous low level. If it breaks below this level, it would create what is known in technical analysis as a lower low, meaning a lower low than the previous one. This would confirm a downtrend and indicate that sellers are in control of the market. On the other hand, if the price fails to break below the previous low and reverses from above that level, then technically a higher low is formed. This indicates that the market is rejecting further downside and is beginning to build strength for a potential upward move. Such structures are considered one of the early signals of trend reversals because a higher low shows that buyers are no longer willing to buy at lower levels and are preparing to take positions at higher prices. Volume activity in the area where this structure is forming is also an important indicator. If volume is decreasing as the price tests the previous low, this suggests that selling pressure is weakening and buyers may be preparing to step in. Conversely, if volume increases as the price drops, this means that the downtrend is gaining momentum and the probability of a lower low increases. How the price behaves at this level will be a key determinant, not only technically, but also psychologically, in helping investors determine the next direction. If a lower low forms, many investors may trigger stop-loss orders, which could accelerate the decline. However, if a higher low forms, market confidence increases, and this may lead to buying pressure. In summary, we are currently at a critical juncture in the chart structure. Whether or not the price dips below the previous low will be one of the most important factors in determining the direction of the next move. At this point, it is important to be patient, observe how the price reacts, and evaluate the situation alongside other technical indicators, because looking at only the lows and highs is not enough. Stay tuned. One of the most notable structures on the chart is the descending triangle formation that has developed over time. This formation is known in technical analysis as an asymmetrical but directionally significant pattern that often provides important signals. Descending triangle formations typically occur when price action gets squeezed between a series of lower highs and a flat support level. In this setup, each lower high indicates increasing selling pressure from above, while the consistent support level suggests that buyers are still stepping in to defend that price zone. A similar structure is currently present. The price has touched the descending resistance line forming the upper part of the triangle several times but has failed to break through. These touches show that this level is a strong selling area, where traders are likely taking profits or applying selling pressure. On the other hand, each decline has found support at a specific level, creating the flat base of the triangle. This support line shows that buyers are still active and unwilling to let the price drop further. What makes this situation especially important is that the pattern is nearing its apex. As descending triangle formations tighten, meaning highs and lows get closer together, it indicates that the price is approaching a decision point. This usually means a strong breakout is imminent, either upward or downward. While such formations tend to break downward more often, due to the declining highs signaling increasing seller pressure, exceptions do exist, and breakouts in the opposite direction are possible. Right now, it looks like we may be facing such an exception. That's because the price is currently very close to the upper boundary of the formation, the descending resistance line. If this area is broken to the upside with a strong, high-volume candle, it would not only invalidate the formation, but also signal the start of a strong bullish trend. In technical analysis, such breakouts are often followed by what is called a retest, where the price pulls back to the breakout level and bounces again, leading to new buying interest. If the price successfully holds above after a retest, it is considered a strong confirmation of the breakout's validity. According to classic technical analysis rules, the potential target for such an upside breakout can be estimated by projecting the vertical distance between the triangle's highest and lowest points in the direction of the breakout. This means if an upward breakout occurs, it's possible to reach much higher price levels from the current position. Additionally, volume behavior within this formation is critical. If volume is decreasing while the price is consolidating inside the triangle, it indicates that a breakout is approaching and that energy is building up. A sudden increase in volume during an upward breakout would further confirm that the move is strong and healthy. Therefore, the descending triangle formation visible on the chart stands out as a key technical structure that may soon determine the price's direction. If the upper line is broken with strong volume, a new wave of buying could begin in the market. For this reason, it's important to focus closely on the formation lines, volume levels, and candlestick behavior. Let's see which direction the breakout takes. When we take a closer look at the Relative Strength Index, or RSI, we can see that it's approaching a highly critical level. This level has stood out in previous price movements as an area where the RSI has repeatedly bounced upward, indicating a consistent reaction zone. In the past, every time RSI approached this level, market equilibrium was established, oversold conditions emerged, and buyers stepped in to push the price higher. This effectively turns the level from just a mere indicator line into a dynamic support zone. Although such RSI support areas are often overlooked in technical analysis, they actually offer valuable insights into the internal dynamics of the market. Since RSI measures not just price but also momentum, any reaction from this support zone reflects a shift not only in price direction, but also in market psychology. These kinds of reversal zones, where investors tend to make collective decisions, often produce similar reactions when revisited in the future. As for the current situation, the RSI is once again approaching this important support zone. This means we're getting very close to the level where past reversals have occurred. If history repeats itself, which is quite common in financial markets, RSI may once again make an upward reversal at this level. In that case, we could see not only a technical recovery in RSI, but also a meaningful rise in price. At this point, what investors should pay close attention to is not just the fact that RSI is approaching this support area, but how it got there and how it reacts to it. If the move down has been sharp, but starts to show slowing momentum and indecisive candles near the support line, that could indicate the beginning of a bottoming process. And if the RSI begins to curl upward from there, it could serve as the first technical signal of a potential trend reversal. In summary, the level RSI is approaching has historically acted as strong support for price, and if it delivers a similar reaction this time, it could pave the way for a short-term rally and a renewed sense of investor confidence. Of course, there's no guarantee that such support zones will always hold, but based on historical data, paying close attention to this area could be a wise move when making strategic decisions. Let's not forget, however, that just because RSI reaches this level doesn't mean the price will always bounce. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.